The much-awaited Q4 production and delivery data from Tesla has been released, and the numbers are creating a stir in the financial world, despite receiving criticism from a number of analysts for not matching the consensus of financial groups. Attention, all Tesla aficionados and investors. Bretton Winston, head of research at ARK Investment Management, sees things differently. He says that Tesla's Q4 results are not a miss, but rather revolutionary, and that the company's stock price could soar to $400 in a matter of weeks. However, before we learn more about Brett Whiten and his opinions about the company, I'd like you to hit the like and subscribe buttons. Now, fasten your seatbelts and let's explore the world of Tesla's Q4 data and future projections. As the director of research at ARK Invest, a disruptive innovation-focused investment management company with headquarters in New York, Brett Whiten is in charge of spearheading the company's research initiatives, particularly in the fields of nation energy and mobility, because of his reputation in the financial industry. Most people would agree with Whiten's commentary on a variety of topics related to innovation and finance. However, the general public should be able to at least hear Whiten's opinions so they can form their own opinions and make an informed decision. Whiten is frequently cited in financial news and media outlets as an expert on these topics. Judicious investment, it looks that Brett Whiten is correct to say that the automaker's Q4 deliveries were not amiss as Tesla's value added increased by €40, despite the market expecting a decrease of roughly 8% by 2027. He estimates that around 60 million electric vehicles will have been sold, with Tesla accounting for a substantial percentage of his total in the next 5 years. He believes that electric vehicle sales will account for the majority of the auto market. Tesla recently revealed its Q4 production and delivery data, which has been criticized by numerous analysts for not agreeing with the consensus of financial groups like Wall Street. Elon Musk's contentious acts last year contributed to the decline in the price of Tesla stock. Elon Musk's contentious behavior has been identified as a contributing factor to the 2021 decline in Tesla's stock price. One significant event happened in May 2021 when Tesla announced that it would no longer take Bitcoin as payment because of environmental concerns. This caused the value of the cryptocurrency to plummet and drew criticism for the cryptocurrency community. His use of social media to remark on Tesla's stock price and other financial problems has also garnered scrutiny from regulators, including the Securities and Exchange Commission. However, the business has expressed concerns about the markets for its vehicles due to the recent reduction in pricing for its EVs in this and other EV markets. Some investors have theorized that Tesla is experiencing difficulties with demand, particularly in the important Chinese market. Reports on Tesla's progress over the last 3 months of 2022 have been fully updated. Tesla stated that its annual vehicle deliveries increased by 40% year over year to 1.31 million, and that its annual vehicle production increased by 47% year over year to 1.37 million. However, a fact-set consensus of analyst estimates indicated that Wall Street was expecting Tesla to report deliveries of approximately 427,000 for the fourth quarter. However, the head of the research at ARK Investment Management, Brett Whiten, has stated that, rather than a miss, Tesla's numbers are groundbreaking, and he added that higher production rates in the next quarters could spur the stock price to go as high as 400 this year. But Brett Whiten thinks production, not demand, will determine whether or not Tesla reaches its growth target, even though Tesla's demand may be falling because EV buyers haven't yet concluded that their decision to buy is due to tax credits on some of their cars. This will eventually pass, taking into account the numerous price cuts that Tesla is doing in most of its markets. So rather than waiting for another incentive or for Tesla's cars to qualify, it may be cheaper to buy the car due to the price reduction. Along with the Model 3, the automaker is unveiling a new vehicle chassis that will be around 50 cheaper in October 2018, must disclose that the next generation platform would cost only half as much as the current Model 3 and Model Y. So even if the project has been delayed and may not arrive for the next couple of years, there's still a lot of anticipation for the new platform. While the EV's delivery date is still a mystery, Musk has stated that manufacturing levels will much surpass those of the Model 3, and the Gigapress, which simultaneously molds large chassis sections, is responsible for this. The new vehicle platform was scheduled to be introduced on March 1st during Tesla's Investor Day. The lengthy March 1st Tesla Investor Day left many supporters and stockholders dissatisfied, which contributed to a Thursday decrease in the company's stock price. Nevertheless, analysts maintained their general optimism and provided an update on cars on Friday morning. An analyst from Deutsche Bank expressed their disappointment with Tesla's lack of details about its next-generation platform. They pointed out that the company did not disclose information about the launch schedule, vehicle segments, price points, or financial ramifications. Nevertheless, the analyst also noted that Tesla demonstrated impressive progress and provided plans for specific manufacturing and technological advancements that they believe will support the company's long-term growth in volume and profit. Tesla did not address the low-cost electric vehicle that was initially unveiled at a 2020 Battery Day event, nor did it provide an update regarding the Cybertruck's delivery schedule. No information about the updated Roadster or updates on the company's new Semi for heavy-duty vehicles. In addition, as of Friday morning, despite Tesla's updates on quarterly calls and investor days, the company's investor relations page still did not contain a Master Plan 3 document. Trucking Much did not provide any information about how Tesla intends to collaborate with his other business ventures, reiterating the sentiments of the Tesla Ball, which had previously discussed how innovation could provide a competitive advantage for businesses. Brett Winston believes that if Tesla can successfully construct this low-cost EV, it will once again set the standard in the EV market. It was also emphasized that there were parallels between current innovations and investments in emerging economies. Speaking of emerging economies, at Investor Day, Tesla executives decided not to reveal the company's biggest news of the week until a few hours into the event, when Elon Musk confirmed during a QA session that Tesla would be opening its next major factory outside of Monterrey, Mexico. No additional information was provided at the time. The following day, Mexican officials revealed more details about the project, including the fact that Tesla is expected to invest $5 billion in the vehicle assembly plant in the near term and $10 billion in the long term, and that the factory will employ between 5,000 and 10,000 workers. The factory will be the company's largest in the world and will be built on approximately 4,200 acres of land. Musk also mentioned during the Investor Day event that he believes some Mexican officials were present, but he did not mention their names or titles. Thomas pointed out that it was impolite to address these authorities in an informal manner, since the new factory is crucial to both Tesla's operations and Mexico's economic future. He might have introduced them by name and shown more gratitude for their cooperation. If Tesla can improve their self-driving technology, Winton believes the firm has a lot going for it in the upcoming years, which might lead to increased demand and a higher stock price. He says it will be a game changer for the company on January 25th, 2023, after the stock market shuts. Tesla released its financial figures for the quarter and year ending in December. The automotive revenue for the quarter was $21.3 billion, which also included $324 billion in deferred revenue from its driver assistance systems. However, the company's automotive gross margins of 25.9% were the lowest in the last 5 quarters, which may cause some investors to have concerns. Tesla recently announced its Q4 earnings for 2022. The company generated revenue of $24.32 billion and earnings per share of 1.19. Even with the recent setbacks, Tesla is close to being able to produce over 1 million units per year at its Shanghai factory, and the company as a whole may be able to achieve even greater production rates as a result of the ramp-up throughout its plans across the world. To what extent do you agree with this evaluation? Please share your thoughts in the space provided below. Thank you for watching. I promise to see you in future videos. This is one of the biggest markets in the world. Tesla is steadily headed towards an even higher increase in cars in transit at the end of the quarter due to geographically diversified production.